Welcome to the weekly Metals, Money, and Markets update for the week ending Friday, July 29th, 2016, hosted by Mickey Fulp, the Mercenary Geologist, and for miningclips.com, I'm Erick Bertsch. Welcome, Mickey.
Hey, thanks a lot. Live from Vancouver.
This will be our first face-to-face. Yes, that's fantastic. So it's the summer doldrums have definitely set in, and it was a pretty slow trading week. But metals, especially precious metals, really shone.
Well, they did the last couple of days of the week, and the week that was. Gold started the week at 13.15. It fell on Monday, and then it popped on Wednesday with the FOMC meeting. Surprise, surprise, no rate raise. We kind of predicted that a couple of months ago until after the election, no rate raise, and bad U.S. GDP numbers. Gold ended up the week at 13.50, 13.51 actually. Silver had a pretty good week, up 3.7%, ended at 20.31. The real mover over the week, and we've been expecting this, was platinum. Closed the week at 11.46, up 6%. Palladium still lagging behind a bit, up 4%, closed it at 7.08.
Right. And moving on to energy, I think the big story for me this week was the fall in oil, and it's not surprising given the concerns over global growth. We saw some bad numbers out of the GDP numbers from Europe and from the U.S.
Well, certainly that did affect oil, but oil was on the downtick anyway. You know, glut concerns remain. We got this refined products glut right now. The other contributing factor was very poor Q2 earnings by major oil companies, and that certainly affected the mood in speculating in oil, let's say. Uranium hit 11-year low again, closed at $25 on Tuesday, but it bounced right back up. There was a request for a proposal for TVA, 1 million pounds of uranium on the spot market. Shows you how thin this market is, because it immediately bounced up 5% over the week to close at 26.75.
It's nice to see a little bit of movement in the uranium space, and of course, moving on to currencies here. Weak GDP numbers out of the U.S. certainly put a drain on it. We saw that go down quite substantially.
Well, U.S. dollar lost 2% over the week, but really that happened at week's end with the poor GDP numbers. Most of that loss was today. It was down 1.1% today. So closed at 95.55. The euro made a rally today with a drop in gold up to 112. And finally, the loonie was a little stronger, although it dropped off today, kind of in tune with the U.S. dollar. But it still closed the week at basically 76.5 cents, up 0.7% for the week.
And now on to markets as July closes out, and we really didn't see much movement in the major markets in the U.S.
Well, I think what you're talking about, what we're reflecting here, is the way you introduce this show, and that's we're in the summer doldrums right now. I checked the VIX; it's below 11 today, and the last time we've seen a VIX that low. To reiterate, the VIX is a measure of the volatility in S&P 500 futures, so it's about the mood and the volume. So year low for the VIX, and the U.S. markets flirted once again with all-time highs, but closed a little down for the week. Dow was actually down all 5 days. S&P made a little rally today, closed at 21.74. Dow was 18.432. The NASDAQ did better this week, up 1.2%. That's basically because tech is performing better than other portions of the U.S. economy. And the real story, once again, for the week in markets is the Toronto Venture Exchange, 52-week high again set today. I look back in the month of July, 17 to 22 days hit 52-week highs. We're on quite a roll. Part of what's going on here, and we're just blowing through what should be the summer doldrums. There's a big investment conference in Toronto or in Vancouver this week, and that no doubt has applied a little froth to what looks like a really frothy gold stock market to me at this stage.
Well, again, thanks for your analysis this week, Mickey, and look forward to checking in with you next week.
All right, thanks a lot, Eric.